Hello. Hello, everybody, and welcome to the Minds and Money Silver Panel. We have three big experts here, Florian Grummes, Angelos Damaskos, and Torsten Dennin. So we'll dive straight in. Maybe if you can give me a little your sort of global macro view so that we can understand where silver and your silver thoughts will jump in. Florian, do you want to start? You're very well known because of your great Midas Touch website, which is for a serious investor in the precious metal, a go-to website.
Thanks, Claude, and hello, gentlemen. Pleasure to be here. Yeah, I mean, let's dive right in. My macro takeaway right now is actually pretty serious. I think the party in China is over. The music has stopped. For 15 years, China has basically created massive growth. Whether it was real or fake, we will probably learn the hard way over the next few weeks and months. And this will have severe consequences for the rest of the world. I just want to quickly share this chart here, which shows the urbanization rate versus the construction of new homes in China. We all know that lots of people from the countryside moved into the big cities in China, so they needed apartments, houses, places to live in. But after the financial crisis in 2008, construction went through the roof, and there has been way too much inventory units, apartments, in the end, ghost cities being built. And now with the bankruptcy of Evergrande, this is coming to the surface, and I think it will have severe consequences. So my takeaway in the short term is over the next few weeks and maybe even months, this will create massive pressure on the markets, which then will very, very likely lead to central bankers panicking, open even more the floodgates, maybe coming up with special drawing rights, which then will create even more inflationary pressure suddenly because there is so much new created currency hitting the markets.
And
so
many smart analysts, including Jim Chanos, have been negative on China for a long time. Is there any data or any reason why this time might be different?
I think we are seeing the signs very clearly now. Evergrande is bankrupt. They're trying everything to save them, but I think it's not the question whether Evergrande is too big to fail. The question is whether the real estate sector in China is too big to be saved. So, and billions of dollars have been flowing into China. It's been a one-way highway over the last 15 years. And especially international investors are now learning that all these offshore debts that they basically sent to China are going to be treated differently than the debts within China. And you can see already the dollar is becoming stronger and stronger right now. So I see in the next few weeks and maybe months, massive deflationary pressures hitting the markets, which then will create a panic response by the central bankers, and they will basically completely go nuts in terms of money printing, which then will obviously spark the hyperinflation, I guess. So this is all part of the larger cracker boom. And once they start really going bazooka in terms of money printing, you will see the precious metals sector turn around. And
we certainly need that because we've been in a painful correction. Angelos, do you want to share with us your macro view or add something to what Florian said?
Yes, thank you, Claude. I share the concern about China that Florian has raised, and it is a serious concern. But outside that, I have to say that there is a little bit of a peak raised in terms of the recovery of the world economy after the effects of the pandemic and the lockdowns. There has been obviously massive liquidity unleashed by central bankers and governments, and that has stimulated certain asset classes, particularly the tech sector, pharmaceuticals, and some other very popular sort of fashionable sectors. But this seems to be ebbing now, seems to be peaking as people realize that perhaps inflation catching up is going to be negative for the economy. We see very strong inflationary pressures from energy, for example, now, that are not a direct component in some the most popular CPI indices. And all of these things could provide a brake on economic growth. And that creates, of course, a headache for central bankers who hope that with the massive liquidity, they would save the world from a recession, the recessionary impact of the lockdowns and the pandemic, and stimulate economic growth. And the obvious concern of central bankers is that indebtedness globally has risen to unprecedented levels, both at public and private sector levels. And they cannot dare think of raising interest rates anytime soon, because it will blow out all the balance of payments out of proportion and possibly bankrupt many corporations.
Okay, Torsten, do you want to give us your view?
Yes, thank you, Claude. As you know, I'm not only running a precious metal hedge fund, but I'm also a professor of economics. So therefore, the macro side, I think, is my home turf here. And I'm looking at this in debt levels on the one side, and I'm comparing the precious metal markets in the moment as a mirror image of the equity markets, when equity markets are continuing their way up as a kind of asset inflation bubble, what we've seen before. Now the real inflation starts to kicks in with 5% in the US and 4% in Germany and in Europe. I agree that real rates have a little of a problem here. The need to increase rates on this to keep inflation under control. All these points in the points of a precious metal industry, and not the new modern monetary policy is not able to help us here to create this more debt and more money until a crisis will be over in 21, 22 probably. So therefore, I think lots of the boxes are clicking in the precious metal industry, and that we've seen this correction in the recent weeks. Basically, look at the rate development, rate and real rates. Rates are going up, US rates and also the European ones, and this is exactly how precious markets should react under the circumstances.
Okay, fine. So when I hear you talking about global macro, the fundamentals still seem very good for precious metals, but we've been in a very painful correction, and I think a lot of our viewers and myself as an investor, I've been suffering so for over a year. Every time it's the same thing. I think it's going to be a small correction, and then we get hit pretty bad. So where are you in the cycle? Are we still in a silver bull market? Or are we in a bear market? Is this a correction in the silver market? So I need you guys to decide, because if you're bullish on silver, I'll put my silver tie back on, and if not, I'll just take it off. So you want to start, Florian, with your couple of charts?
Sure. Yeah. Thank you, Claude. Well, I think where are we in the cycle in silver? We are in a correction digestion kind of thing since basically August a year ago. So 14 months, the precious metal sector is within a correction. Why? Because before that, gold had been rallying 2 years, massive rally, $900 higher, new all-time high, 2075. Finally, silver also kicked in. And these kind of moves just need to be digested. I think that's the very simple takeaway from it. You also need to understand, I mean, that's my belief, silver is somehow a schizophrenic diva. It just simply behaves crazy. So I have this long-term chart here, and you can see that in the first part of the bull market, 2001 to 2011, especially in the financial crisis in 2008, silver suddenly massively underperformed gold. And then in the end, basically in the last year, out of 10 years, in the last year, suddenly silver started to spike and went up to $50 within 9 months. And the same behavior we've seen again then during the correction, during this little bear market, this 4-year bear market. And we've also seen it just last year in the Corona crash, while gold had been nearly reaching its all-time high already, $1,700 back then before the Corona crash. Silver just made it to like $21, and then it crashed to a new 10-year low. And then the bull market kicked in, and within 5 months, it went up 160% nearly. So you need to understand silver is a tiny market, it's a crazy market, it's doing its own thing. It's usually coming to life in the later stage of a cycle. And in the beginning of a bull leg, silver is lagging. So that's why I expect for the next 1-2 years, silver won't be that superstar that everybody would like to see it.
Okay. Angelos?
Yes, whilst I agree with the longer-term development of silver, I have 2 points to make. The first one relates both to gold and silver, in the sense that we have seen this consolidation pattern for the last 14 months or so. And I would note that this consolidation coincided almost perfectly with the realization that the vaccines could be effective, and the people rushing into the so-called recovery sectors. So there has been a very strong distraction of investors away from precious metals and into the general growth sectors of the economy, the recovery sectors, where they could invest their capital profitably. So massive amounts of capital got diverted from the safe haven assets, such as gold and silver, and went into the recovery sectors. Now that we are seeing a little bit more of a realization of the economic growth prospects, perhaps it's the time that some investors have started thinking again about hedging the portfolios and increasing the allocation to safe havens. The second point is to do with the rapid growth in the industrial uses of silver. Particularly as we have seen globally in the last couple of years, this massive push for decarbonization and sort of green power generation and electrification, as well as technology applications. And I can see some figures from the Silver Institute that indicate.
Angelos, we're going to have a whole debate on these fundamentals a little later. Here, I want more your view. Are we in a bull market for silver? How long this correction is going to last in your time?
Well, as I said, I believe that we are in a bull market for safe haven assets, including gold and silver. And we have seen a consolidation pattern, as Florian indicated. We had a very strong rally for 2 years, and then we have seen a consolidation pattern for the last 14 months or so, which was perhaps caused by this distraction of investors into the growth sector of the economy. But I think it is time now to break out of this consolidation pattern and resume the uptrend. Okay, so whether it's going to happen in the next few months or in a year's time, that's another question. But I believe that we are set for another leg up.
Okay, so we have up till now 2 people who are still bullish on silver and are thinking that the correction is nearly over. So Torsten, what's your view?
I'm not on the bearish side to point this out on that side, because the precious metals.
So we have basically three long-term bulls. So I can put back on my while you continue talking, I can put back on my my silver tie.
Yeah, put the silver tag on. I mean, this correction is very painful for investors, but also for managers. And I like Florian's long-term charts, and I like them even more when they're longer than that. On that, I see like correction phases like this 3 times since the 1970s. I think we're in a correction phase, starting from looking at the big brother on the gold price shooting up to 2100 very fast. And we've seen this pattern like in a repetition. And I think the 70s have lots of similarities to the 20s today in terms of some of the macroeconomic points, and especially like this decoupling and the outlook on the precious metal side. So might be where in the 1973-74 is. So there is like I think some golden and silver lightning on the horizon for us, and this might be the last months of kind of this correction down to the 2022 section on the silver, and the push getting the gold price to the 1700s, 1750s.
Okay, fine. Bon, so maybe do you have a few points to share with us on why we've had this correction? So of course we had a big push up. That's very clear. You made it clear. Are there specific reasons for this correction? Some of you mentioned already rates going back up. Are there other reasons? Florian, I know you do a lot in crypto. I think a lot of money went to crypto. Are there some, and then maybe a view, do you think that the correction is already long, so you say it's probably not going to last too long now? Do you think it can be, we can have a dramatic sell-off, or the most of the pain is done?
Yeah, exactly. That's what I actually expect. So I have this daily chart here. It starts with the Corona crash last year, and you can see this 156% rally within 5 months. And since then, silver is basically trading sideways between, on the upside, the maximum was around $30. On the downside, as Torsten just said, there's the support zone between maybe $21.50 to $23, more or less. And unfortunately, we know from the past also that right before the largest moves in the precious metal sector, the sector has the tendency to shake out all the weekends with another fierce pullback or final sell-off. And as I said in the beginning, my macro picture over the next few weeks and months is actually rather deflationary due to this China problem. I could very well imagine that silver does one last dip down to maybe $18.50, $18, and that would probably then be the final bottom for silver, from where it then turns around. And you can see right now it's clearly trading below the 200-day moving average. It broke this triangle to the downside. There's nothing really bullish right now in the daily chart for silver. And again, the dollar is getting stronger. We can talk about a lot of other reasons why. I think one big reason over the summer was that the Fed has basically been bluffing the markets with their tapering talk. We will quickly learn and see that they won't be able at all to taper or raise interest rates. This is all impossible in the current situation. So the market still believes that. That was also one reason why the precious metal sector came under pressure. But also, I think, especially gold is sniffing out these problems in China already for quite some time. So I still think over the short term, over the next few weeks and months, you want to be cautious. You need to have liquidity. And then at some point when it's obvious that the central bankers reacting in panic, then it will be the time to jump into silver mining stocks especially.
And of course, everybody is making so much money with their ESG funds, which basically are full of FANG stocks, so basically US technology. So a lot of money has been, going back into the NASDAQ and so on. Usually, very often, precious metal investors have a view that we are in bubble territories in real estate, but also in the stock market, which is, when you see the valuation, they have a point. I'd like to have your view on the fact that a lot of precious metal investors are sort of concerned that if the stock market was to go down, then it would take down with it the gold and the silver stocks in the first round. But of course, historically, this has not always been the case, but it has been the case in the last couple of instances.
It's been the case in the financial crisis, which is the most important blueprint that we have from the recent history. So if you see a rush towards safety in terms of US dollar, if we get a US dollar squeeze, short squeeze, which I could definitely imagine given the situation in China, then everything will suffer in the beginning. And then you will see precious metals being the first ones to recover and basically bottom out and then recover and start a new rally. That's what also happened in 2008.
Okay. Bon, fine. So let's dive into fundamentals on the silver side. So who wants to go into the nitty-gritty of the supply demand?
Yeah, maybe on the fundamentals on the companies, Claude, because I think this is the missing link in the equities. when you compare the market fundamental and fundamental valuation and talk to normal investors, I said normal investors and precious metal investors, you look in the precious metal industry and see companies with a valuation of a price book ratio of 1. You see price earning multiples of 3, 4, or 5. And when you look at, let's say, the other extreme, like at a Tesla, for example, with a price book of 30 and the PE ratio of has been 1,000, now been 300 after the correction. So basically, a precious metal investor with a solid company that you can buy for book value, it pays basically from its earning, all its earnings back in 3 to 4 years' time. And when you compare this to overall the equity market, which valuation, when you look at the Schiller PE, when you look at the Schiller PE for S&P 500, it is on the way to max out. So it's not on the absolute maximum. The dot-com crisis, the tech crisis still was higher. Besides this, it's the highest valuation we see in equities since 200 years, even including 1929 before the Great Recession kicks in. And I think this is the base where you need to look at the names in the precious metal, be it the silver names or some of the gold names.
Absolutely. It's true that even if your timing is not perfectly right, if you're buying cheap, you're going to do very well in the long term. So it's true that people with a solid portfolio of silver and gold stocks with reasonable price to cash flow, they'll do very well, even if they miss, even if they have to suffer a little more, as you suggested, that this correction might not be over. So back to the fundamentals.
Can I just make a general observation and a comment here that for years, of course, the market has been kind of bifurcated with two segments of the market or two classes of investors, I would say, that rarely talk to one another. There are those that look at the technology stocks and the growth sector and all the related sort of paraphernalia, and are happy to pay these crazy multiples compared to other normal value investors. And there are the more value-oriented investors like Buffett or other more traditionally focused on multiples and earnings investors who like to look at price to book values and sensible PE ratios. The question is, when will that relationship start to merge, i.e. one band of investors starting to realize that all might not be well in terms of the growth profile and start questioning the multiples that they are called to pay. And to a large extent, this has been supported by the massive liquidity pumped into the system. As long as
so
it is massive liquidity.
Does that mean, in your view, that the stock market could go down and then gold and gold stocks and silver stocks could go up immediately?
Potentially. There is always the beta correlation. The gold and silver equities are equities like anything else. So when we have a market crash, when people are scrambling for liquidity and are trying to sell anything in their portfolio to get that liquidity, of course, in the less liquid stocks like gold and silver, you suffer the liquidity downdraft. But if we are right in our assessment, these will not only recover first, but they will also recover the most.
Okay, so who wants to deal now with some views on the fundamentals on silver? So we know that the biggest driver is always investor demand, but it's also the hardest to predict. So we know it's going to come back. We're all on the same boat. We're all bullish long term. So aside from the investment side, who wants to talk about what's happening with this green revolution, the new applications of silver, because this is growing exponentially. There's the wind turbines, there's the solar. They need a lot of silver. So who wants to give us a few facts on this subject?
Well, I can start, if you like, Claude, by just stating a few facts that I picked up from the Silver Institute, which offers a wealth of data on the silver market. And it indicates that the demand for silver in the electronic sector now consumes approximately 21% of the annual production. And another 13% or so is consumed by other industrial applications, which include biomedical and other sort of electronic applications in microchips, and even electric cars use a lot more silver now compared to internal combustion engines because of its high conductivity, electric conductivity. Photovoltaics are still about 9%, but the projection is that the solar panels will consume potentially 200 million ounces of silver by 2025. And that is more than 20% of the current global consumption of silver. So if that projection is true, it happens, that could cause a major supply-demand imbalance, because current annual production of silver is between 700 and 800 million ounces only.
Right, so 200 million ounces out of 700 million ounces, that would be a huge number. So it would create a natural floor for the for silver, whatever the investment demand.
Yeah, and this is what I like in the silver outlook, that not only it is a safe haven asset, which is considered a cousin to gold and will be sought by financial investors if they seek to increase their allocation in safe havens. But there is also this rapidly growing industrial demand that is more resilient and more long-term in its orientation, rather than volatile and prone to changes in the investment sentiment.
Okay, Florian, do you want to add something on the new uses?
Yeah, I mean, it's obvious that we're moving towards more and more green energy, electrification, and silver is a very important metal in that case. The industrial use cases will go up in the future, and silver is only a byproduct in most cases. And we've seen last year what supply shocks can do to these markets. I think on a longer term picture, and we've seen this just recently with uranium, when slowly now the world is waking up to the fact that we might need a lot of uranium in the future to just come up with all the electricity that's being needed for that shift. I just can underline what Angelos just said. I think Torsten should have the time to talk a little bit more about that.
Yeah, and the French consumer yesterday, where they were announced that the gas price was going to increase by 14.3%. So that's sort of like a 50% increase in their utility bill in the last year. So maybe they'll put a little less pressure on the ESG side of things. Who knows? Okay. Any other views on the silver fundamentals?
Yeah, I think on the fundamental side, from the supply outlook, there is no big surprises coming up in this price segment. I mean, there's when you look at the exploration and development trends, they invested money in building new mines. I think we are close on our projective path about silver production levels. I see surprise here more on the negative side, looking ahead maybe 2 to 3 years. I don't see so much potential for positive surprise, but a big silver deposit looming that's getting into production. And on the demand side, the trends to a new technology, to more silver use from the industrial side, it's increasing and over capitalizing the sectors that are falling a bit behind. We talked about the panel industry, we talked about antibacterial, we talked about technology. It's not skyrocketing, but it's a positive trend. And I see here the gap is slowly opening up. So not a disruptive one, but the gap and the gap between supply is going up without a buffer. So that makes it quite interesting. I think we see like this normalization from the gold-silver ratio. The gold valuation in relation to gold has been a bit normalizing, but still is high. And I think this is what we see in the cycle. We are like early in the cycle where silver can outperform. We've seen a bit of it. Yeah, but it's definitely not at an end, and we are more on the beginning side of that.
Okay, any other comments on the silver, on the gold-silver ratio? Because for me, it looks like silver is one of the cheapest things anybody can buy. If with 1 ounce of silver, I could not invite all 3 of you to have a coffee in Lausanne where I live. That tells you how cheap it is.
Right. And you can see here, I have the gold-silver ratio just pulled up.
That's what's great with Florian. You always have the best chart, so it's fantastic.
Thank you. Yeah, silver is like 0.01% of the global financial system. So it's tiny, and there's a lot of room to grow in terms of price and basically percentage, right? If you look at the gold-silver ratio, you can see that from the top at $50 in May 2011, the ratio came all the way from 30 ounces of silver for 1 ounce of gold up to 125 ounces of silver for 1 ounce of gold in last March. And since then, this ratio has come back down, down to 62 ounces. Now it's trading at 78 ounces of silver for 1 ounce of gold. Naturally, we know in the earth, it's rather 10 to 1, 9 to 1, 11 to 1, something like this. Over the last centuries, it's been rather around 15 to 1. So you can always and still make the argument that this has to at some point go lower again, and you might see at some point 30 ounces silver for 1 ounce of gold again. Technically, we had this wedge. It was a fails breakout in the Corona crash to the upside and then came all the way back down. I think this has been a large trend change here. We've seen now a pullback basically or counter trend move. So far, I'm actually impressed how well silver has been holding up against gold. You can see even on the ratio chart that the stochastic is overbought basically, but I made it green because we're looking from a perspective of a silver bull. So that means it's likely that this oscillator also at some point wants to turn down again, which would mean silver starts outperforming gold again.
Okay, so I keep my silver tie. Silver is very cheap still versus gold, and it should have some catch-up effect. Okay, so look, we're going to talk about a lot about stocks because the way to make money is always to buy stocks. And we have these 3 panelists who are going to tell us about the stocks they like. So we're going to mention something like 14 or 15 stocks in the coming 20 minutes. Before we start this, maybe could you sort of tell us what's your view in terms of asset allocation? So let's say you have a little precious metal. Portfolio with silver stocks, gold stocks. What percentage would you put in silver stock? What percentage in gold stocks? Or we're in a correction. Should you be more in the bigger, more prudent companies, or should you start, buying up some cheap juniors? What's your overall view in terms of positioning? Because if you're well positioned, even if your stock picking is not the best, then you're going to be okay. Angelos, you want to start with that one because you've outperformed all your peers in the UK with a plus 75%, and I think that was due to an overweight in silver stocks. I think that's a pretty nice strategy. You want to comment on that?
Well, I would comment generally that our junior gold fund is a small cap focused fund. So it really is a sector allocation tool for investors who wish to have exposure in a diversified portfolio in smaller caps. Because it is so concentrated in small caps, it is naturally much more volatile than our peer group. So we did outperform the peer group in 2020, but we had slightly underperformed the previous year in 2019 because the majors and the mid caps did better than the small caps. So you have to sort of think of it in terms of the longer term development of the sector and how you wish to position your allocations in precious metals equities. And I think most investors will have a certain allocation in large caps, another allocation in mid cap producers, and then the final allocation to small caps that will do better or outperform in a bull market. But in a bear market, we are prone to the downdraft of the market that causes damage to the less liquid stocks and could introduce higher volatility. But having said that, in our fund, we follow an approach of having 60% weight at the moment in gold stocks and 40% in silver, precisely because we think that silver is likely to outperform gold over the next couple of years. One, because it's a cousin to as a safe haven asset, and it is traditionally much more volatile than gold when the market is in a bull phase. And secondarily, because of this growing industrial demand that provides an underlay or a support for demand for silver. So the three top holdings among our silver gold miner portfolio are, I will start with a company called Arcana Silver, which has approximately 200 million market cap. And it has just started production at its Revenue Virginius mine in Colorado. And this is a past producing mine that had been closed a few years back because of the low silver prices. But they are now starting production, and it indicates that it could pay back in less than 2 years, even at lower silver prices than we are now. So the advantage of restarting a past producing mine is obviously lower capital cost. There was a significant existing infrastructure available that the company was able to utilize, and they only spent approximately $35 million or so of capital expenditure to bring the mine back to production. So this is all very positive, particularly as the silver price rises. The so-called operational leverage of such a producer is very important as its profitability expands very rapidly and dramatically. So we see this still at 200 million market cap as a fairly attractively valued company, which could be re-rated as people realize the potential for cash flow generation. The second one I would point out.
This is Arcana. The symbol is AUN. And it's trading at 74 cents, and the high was much higher. I think it was above 110. And yes. This is quite interesting because since we're never sure of where the bottom is, here you have a trigger which is immediate. They are now entering production, so people will have to buy the stock. So there's a let's say a timing effect which is positive. I think your second stock has the same immediate potential.
Yes, the second company I want to bring to the attention is a company called Avino Silver and Gold. And this is slightly smaller at around 100 million market cap, but it has just restarted mining and production at its Avino mine in the Durango state in Mexico. Where it had to suspend in a combination of low silver prices and some industrial dispute with the labor unions, which have now been resolved and production is being put back into operation. This is again a past producing mine, which was operating between 2012 and 2019 at an average all-in sustaining cost of less than $10 per ounce of silver. So it used to be a very cost-effective and productive mine, and that the new studies now indicate that a similar production performance could be achieved again. Therefore, again, the operational leverage, so to speak, to rising silver prices can be significant because the profitability of the company expands very dramatically. They also
the production was halted for how long?
The production was halted for approximately 2 years,
And they're starting right. And they're starting right now.
Almost 3 years since 2019. I can't remember exactly the month of suspension, but they have now started again as of August.
Okay, so the stock went from $2. It's now at the low of $1. So
yes.
It looks like there's very little downside left because now people will see the production results. Well,
more importantly, at 100 million market cap, the company has approximately 27 million in cash and approximately 75 million ounces of silver equivalent reserves, MNI, measured and indicated. So in terms of what you are paying to buy this significant resource, I believe is very conservative and could be re-rated once people realize the fundamental value.
Great, thank you. And your third stock?
And the third stock is a more of an early stage development story. It's called Silver One Resources, and it controls a past producing mine again called Candelaria in Nevada. Nevada, of course, is a well-known tier 1 jurisdiction for the production of precious metals. It has been called the Silver State on several occasions. And Candelaria operated up until 1999 by Kinross Corporation. And it operated very profitably, producing something like 36 million ounces of silver in its lifetime. So since then, obviously at the time there was a lot of pressure on precious metals miners. The mine was uneconomic at the then prevailing silver prices, so it was suspended, and then it passed ownership a couple of times until Silver One acquired it in 2018, I beg your pardon. And since then, they have been reworking the feasibility study, and they have been drilling more to extend the resource, producing some excellent drilling results of up to nearly 2,000 grams per ounce of silver. So it is a very prospective development, which again can utilize existing infrastructure and the past producing status of the property to accelerate the permitting process and put this mine back into production at a relatively lower cost.
Right. So any ounce they find has a multiplying effect because it can be a mine. Okay. Well, thank you very much for these stock picks, Florian. You want to give us a few ideas on some solid producers to buy, because since you're bullish long term, but you're uncertain of exactly when the correction will be over, it's always, prudent to be in things that generate cash flow, because whatever happens, you can hold and be okay and profit immensely in the long term.
Exactly. Yeah, I'm still hesitating to ramp up my full silver stock exposure right now, especially the smaller ones, which are obviously much more risky. I will do it at hopefully the right timing. I've learned to be patient over the last 20 years and many painful lessons. So that's actually the main thing that I personally work on, becoming more and more patient and just wait until the time is right. And I think right now it's not the time to fully load up on silver, even though it's very undervalued. Everybody made valid points today. In the longer run, I guess it's a good investment to be in silver stocks. If you look at the larger silver caps, so to speak, and I have brought a performance chart here comparing some of the big names. You see that in the orange line, it's Hecla. Then my favorite is Mac Silver. Then you have Gatos, which is a rather new company. You have First Majestic, which used to be the silver stock to go to. You have in gray the silver itself, and then you have Fresnillo, and you have Pan American Silver. I prefer those companies right now instead of the smaller ones, simply because I think in this deflationary downturn, the smaller ones will suffer even more. And Angelo said it rightly. If liquidity is not there in the sector, these stocks have no bid, and then it's all going south. And that's actually the most painful thing for precious metal stocks investors. there is no fundamental change over the last 1.5 years. Most of the companies are doing well. Most of the gold and silver producers reporting great numbers, and they're doing great progress, but the environment is not there. And you can quickly find yourself 30, 40, 50% underwater, even though there has nothing changed in terms of what the company is doing and in terms of the fundamental situation. So I personally like a lot MAC Silver, and I show you why. This is the revenue mix for 2022. MAC Silver is supposed to be probably 73% of their revenue mix is silver related, which is quite high in comparison to most of the other companies. So you will get rather a more or less pure silver exposure with MAC Silver. It's a great company. It's a great management. I'm a big fan of Dr. Peter McGaw, obviously, a great geologist. I think the assets that they have are good. They're starting production. They have a strong partner with Fresnillo, and I like them a lot. Let me see if I picked the right chart. This is MAC Silver. You can see they have been holding up rather well, coming out of the Corona crash 536%, and then they have been basically trading sideways. And still, you see 40% down, 70% up, 30% down. Oversold, very interesting stock. I think that's one of the less risky plays in the sector. I also like Pan American Silver as one of the big names. However, they experience quite a lot of political headwind. The mine in Guatemala is still closed. They need to go through various meetings with the indigenous people over there. Nobody knows how long this will take. The same or similar situation they have experienced in Argentina, where they're also depending on government decisions to get the permit to open their mine. But,
right. On the other hand, you have two immense call on Guatemala and on Argentina that basically is not in the price. So it's a free call, isn't it?
Exactly. So, and my thinking is that in the longer term, it's actually better that Pan American Silver cannot bring the silver right now to the market, but will be able maybe in 2-3 years when hopefully silver is much higher. It makes much more sense for an owner of the company, right?
Absolutely.
So I think they have quite some catalysts that the market is not pricing in right now. Excellent management, obviously very professional company. It's a large producer, so that's one of the top picks in terms of less riskier silver stocks, right? And then if you go down the ladder, I mean, Gatos, I also like a lot. Maybe one thing I have to mention with Pan American, I mean, they shifted a lot. Their production is actually more gold than silver nowadays, but still, I think you can put them in the silver.
Okay, so on Gatos, because that's very, very interesting. It's a new company. That's what's interesting in the silver space, is that a couple of years ago, it was difficult to find names, but today there are a lot of new entrants, and Gatos is certainly one of the top quality. It's a Tom Kaplan stock from the Electrum Group. The stock will always be expensive because they know how to market, but I spoke recently to their top geologists. They think that they could bring the resource to 1 billion ounces. So this is going to be a huge deposit. So maybe you want to tell us a few things about it.
Yeah, as you said, I mean, there's really good people behind the story. I think they prepared it quite a while before going public. I think they plan to come up to, at some point, 9 million ounces of silver equivalent every year. They have a good resource of already 10 million ore and good grades. Some of them are really high grades. And yeah, it's Mexico. Obviously, Mexico is one of the places to be when it comes to silver. And I think
it's a relatively safe area of Mexico, right?
Right. So
any other producers you want to mention?
From the producers, well, I mean, I always like Keith Neumeyer and First Majestic. They had quite a challenging time. Stock has been coming down quite a lot, but I have to say I really honor Keith for being one of the few people who says we don't sell all our silver at these prices. We basically put silver on the balance sheet, kind of. That's something I really think is a good move. And but they too move more and more into gold. So It's not my favorite right now.
It's true that in a silver bull market, we know that Keith Neumeier can promote like nobody else. So it's always the high beta stock. So it's a good bet. Maybe
Torsten, one smaller
stocks you want to recommend, and then we'll come back to the smaller companies. If we can wrap this in 5 minutes. Torsten? Okay, Florian, go ahead with your small caps then.
Yeah, maybe one that I like, and it's actually also coming from the people around Fresnillo and Max Silver. It's Reyna Silver. It's an exploration company focused on Mexico. I think it's also good people that Jorge Monroy put together there. Great team, good assets. Peter McGraw again as the geologist here. It's basically projects that have been outsourced from Max Silver. And I think they're working on something really interesting there. So that's one of my smaller picks that I like. I would also say maybe Defiant Silver. And I also have to say that what Angelo came up with those two companies, and you can see it actually in the charts, which I don't have with me right now, but Aucana and Avino are also, I guess, I think very, very, very interesting, promising stocks.
So on Defiance, why Defiance?
Let me pull up the chart. It's here. Yeah. Well, Defiance, they have also two assets in Mexico, which generally is good. They are in Zacatecas, which is one of the oldest mining regions in Mexico, and they have the Lucita project and they have the Tipal project. I think it's both.
Tipal, yes.
Say it again.
Tipal.
Yeah,
T-E-P-A-L.
Exactly. So in this region, there have been mined, I think, 200 million ounces of silver in the past, which is always a good indication. Generally, you know that saying, you want to build a new mine next to an old mine. It's a classic one. It's just de-risking the whole story, right? And I think they have about 50 drill holes already. And they have a first resource estimate of 17 million ounces already. So I like that story. Of course, it's a pretty risky one. You can see here, this is the chart. But again, this also has been holding up not too bad, but it's down 60% from the top in the summer.
And the exploration looks pretty good. They hope to be having something like 50 million ounces in the not too distant future. Anyway, yes. Well, thank you very much, gentlemen, for all these insights on the global macro and also on the stock picking side. Maybe just to conclude, all of you are bullish long-term on silver. I've put on back my silver tie for you. And the only thing I can say in terms of timing is that if we want to make it big in this market, the theory in a bull, the timing will never get it right, okay? So we've had a correction which has already been very, very profound. So I think that starting to accumulate or to increase position now is probably a good idea. The theory in a bull market, and we are in a bull market, is to buy the dips. Gentlemen, thank you very much. And now we can conclude this. So this concludes our Minds and Money online on the silver panel. Thank you very much.